Well, hello, folks. My name is Benjamin Z. Miller. I am the managing director of a United Kingdom company, Alamo Mortgage Holdings. We are a company that can pay you a long-term passive income when you make the wise decision to purchase one of our corporate income bonds. We do that through investing. We purchase mortgage debt at a steep discount. We go in and we negotiate hard and we buy packages of mortgages at a discount, and that lets us pay our bondholders such a high rate of return. But before I go through this presentation today, I'm going to just mention a few things. I'm going to read a brief excerpt. As accredited investors, you will be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. Okay, so here is a very interesting chart that shows the long-term history of the British pound and the US dollar. And it kind of shows the trend where if you look, you will see that if you went back to the end of towards the end of World War II, when the Bretton Woods Agreement was implemented, at that time, 1 British pound sterling would buy approximately 4 American dollars. And through the decades, the pound has lost value to the point where on the 1st of January, 2023, 1 British pound would only buy $1.21 in the United States. Now that's real relevant if you're a UK investor and you are thinking to yourself, well, why would I want to invest in US mortgage debt when I could just buy mortgage debt in the UK? Why can't I just do that? Well, you can, but here's something to think about. Getting an 8% rate of return that is denominated in British pound sterling may not work out as well for you as getting an 8% rate of return that's denominated in US dollars, due to the fact that the currencies are changing value over time. Now, whether you are a pound bull where you think the pound is going to come roaring back against the dollar, that's fine. We'll sell you the bond in British pound sterling. We have no problem with that. You can have it as pound denominated. Or if you think that, hey, I see the history and I think that I want to diversify some of my currency, I'd like to buy some bonds that are paid in US dollars, we can do that. And we don't make any money on the exchange rate. We do it at the listed newspapers exchange rate. We don't play around with trying to charge a little fee. We just convert it for you. Or if you're not sure, you can do 50% in dollars and 50% in bonds, in pounds. So if you've got money in pounds and you want to put half of it in dollars and half of it in pounds, we can help you with that when you purchase one of our corporate income bonds. So it's a fantastic opportunity, and it's something that's important. With mortgage notes, there's several factors that drive the value. And this is something that if you're going to purchase mortgage notes, you need education and you need training. And there's actually a really good guy, Eddie Speed, that I highly recommend. He's great at education, a very experienced note buyer. And if you're wanting to actually be a note investor, you should do that. But you need to know it is not easy. It is going to take a lot of hard work and a lot of time to learn how to buy mortgage notes. If you are, maybe you're a dentist, for example, it was not easy for you to become a dentist. You had to invest a lot of time in that. Well, the same thing if you want to be a mortgage note buyer. Fortunately, when you work with Alamo Mortgage Holdings, we take care of all that for you. We go out there and we get you a good guaranteed rate of return. We offer a rate of return that is hundreds of basis points over what you might be able to earn on UK gilts and other government bonds. It is fantastic. But just to give you an idea of some of the factors, when we price mortgage notes, one of the things that we do is we look at the buyer. We look at who is the guarantor on that note. Is it someone that is, maybe they've got a government job? That sort of buyer is more desirable because they have reliable income compared to a self-employed buyer. We look at the collateral. We will go and we will get sometimes a BPO, sometimes depending on the asset, we could even get an appraisal on it, but we get an idea of what the collateral is worth. And we take that into account. We look at the buyer's down payment. Did the buyer put a lot of money down when they took the debt out, or did they only put a little bit? We like to see larger down payments. We look at the terms. What's the interest rate? All other factors being equal, a note that pays 5% is not as attractive as one that pays 10%. We look at the history of the payments. Is there a record of the buyer making payments on time? That's so important. Was that done by a servicing company? So important. We look at the paperwork. Was it closed properly at a title company with lawyers involved? All of these things are important. But the great thing is, if you want to just get the income and you want something that pays more than government bonds, we have the financial product for you. Here's an example. This is a property that's a real property. It's in Sweetwater, Texas. It was advertised for sale for $120,000 US. Now, I want you to imagine this transaction did not happen, but I'm describing it to explain the idea. It's a real property, but the numbers here are set up to show the idea. So let's say that the buyer came in and they offered the seller, hey, I'd like to buy this property. I can't get a mortgage. I don't have good credit. I'd like to buy this property. I'm self-employed and the bank just told me to get the hell out of the bank. So in that example, the seller says, okay, well, if you're going to pay me, I'll make you a loan, And so they agree that the buyer will put $20,000 down, and the seller agrees to receive payments of $877.57 per month for the next 360 months. They agree on an interest rate of 10%. And this is what happens. And for 5 years, imagine this goes perfectly, where the buyer always pays the seller on time. But then one day the seller wakes up and he wants cash, or he needs cash, or something happens where that seller wants cash. So first he goes to his buyer and says, hey, can you please get a mortgage? And then the buyer says, no, I still can't get a mortgage. The bank says I'm still self-employed and they don't like my credit score. So then as a result of that, the next call is the seller. He starts looking around on the internet for sell a note for cash, and he finds lots of companies. He finds companies like Alamo Mortgage Holdings, and there's a bunch of them. There's not any company that's truly like Alamo Mortgage Holdings, but in that seller's mind, it's like Alamo Mortgage Holdings. So he calls up and he says, hey, the unpaid balance on this is $96,574. Please pay me that and you can have the note. You get to earn 10%. And the note buyer says, I don't know about that. We want to get more than 10%. We will only offer you $83,322. So that's how that breaks down. And there's some negotiation that goes on there. And it is so important. So now a question that I'm sometimes asked by people is, why bonds? Why in the world would I buy bonds if there's inflation? People love to talk to me about inflation. They say, well, there's inflation. Why would I buy bonds? Well, rather than giving Benjamin Z. Miller's opinion, I'm going to answer the question with a Nobel Prize winning economist's opinion. I'm going to talk about Harry Markowitz, who he won the 1990 Nobel Prize in economics for his contributions to modern portfolio theory. And if any of you have accounts at BlackRock, if any of you have accounts at Merrill Lynch, this is something that they just love. They just love these theories when they design their portfolios. And really a lot of what they do is based on this work. Not all of it, but a lot of it. So, but it's interesting. Harry Markowitz, he didn't even use that with his own portfolio. He invented all this complex stuff, and everybody ate it all up because it had a lot of math and it was exciting. But in reality, for his own portfolio, he did something far simpler. He'd put half of his money in stocks and he'd put half of his money in bonds. And once a year, he would adjust. So if the stocks had gone up a great deal in value, he would sell stocks and then he would buy more bonds. Or if the stocks had gone down, he would actually do the opposite. So if the stocks had gone down, he would sell bonds and he would buy stocks. That's how that works. Why do we do Texas? And why Texas? I mean, why in the world do we do Texas? Well, Texas is a state that's winning. Texas is home to a lot of great companies. They are moving in. They are leaving California. They're leaving New York. They're saying enough. They're saying enough. So Texas is a state that's winning. As people move in, the value of the real estate goes up. And since the business that we're in is based on the value of real estate, the higher the value of Texas real estate, the better it is for Alamo Mortgage Holdings and for our bondholders. What are some of the key features of the bond? We help you reach your passive income goals more quickly. Whatever your goal is, we can get you there. We can get you on a plan and a program where if you participate in our annual investment program, you're going to be able to earn more and more. It is fantastic. We offer maximum diversification. There's a lot of people that they try doing the mortgage business on their own, buying notes, and they get their hand burned on the stove because they make a mistake. They don't know the difference between a second and a first lien. They make a lot of beginner mistakes. With Alamo, you don't have to deal with any of that. You get our team working for you and all of our experience. We don't charge you any fees. If I hear one more investor tell me about their low-cost index fund, and they say it so proudly, I've got a low-cost index fund. Well, that's great that you've got a low-cost index fund, my friend. But better than low cost, how about no cost? If you do business with Alamo Mortgage Holdings, you're not paying any fees. That, to me, makes more sense. We offer interest payment flexibility. We can pay to the account that you desire. We've got information on our team. Just go to our website. Go to www.alamomortgageholdings.co.uk. You can learn about the team. We've got a team that has over 200 years of business experience with 100 years in the mortgage and the real estate industry in Texas. We've got a great team that is working hard for you. You can look at the profiles. You can learn about all of our team. We've got a really good group. We've got a lot of people that know the mortgage business. Everybody's dedicated to your success on this. It's something where we want the best for our bondholders. We have Andrew Richings, who's in the United Kingdom. He's a consultant with Alamo Mortgage Holding. He's also the founder of Thomas Kelly Holdings, and I highly recommend Thomas Kelly Holdings. They are fantastic. Few questions. Why buy the notes? This is something where if you want an above average rate of return, you should buy the notes. How long term is the note? We offer 3 years, 5 years, 50 years. Can I put the note into my sipp? I don't see any reason you can't, but it's up to your sipp provider. What type of an investment? It's corporate income bonds. It's not a government bond. Is it a regulated product? No, we are not regulated. And that's part of the reason we can pay so much more to our bondholders, because we are not regulated. We haven't gone through the additional expense of regulation. If we go through that, we have to build that into our pricing model, and that means lower returns for our bondholders. Now, that doesn't mean we'll never go through regulation, but so far our investors and so far our bondholders, the people that are interested, they're looking at the higher returns. And at some point down the road, we may do full converting it to a regulated product. Who can invest? Come one, come all. Accredited investor, sophisticated investor, UK investor. We are here for you, and we make the process very simple. How's the money protected? We can go over that on a one-on-one call, but it is thoroughly protected. Can I invest with a company? Yes. How's the tax managed? It's so simple. We pay all the money to you. Are there any limits on what you can invest? That's the best part. No limits. And we can support large placements from institutional investors. Can I get the money early? No, this is not this type of thing. It's not like a day trading product where you can, move in and out. And frankly, they've done studies. People that stay in an investment, even if it's one that is doesn't have the spectacular returns of losing money on the day trading game. This is something that long-term has the potential to provide far higher returns. How do you invest? Just reach out to me. Send me an email, ben.miller@alamomortgageholdings.co.uk. I hope that helps, and I wish you good luck with your investing.